let's talk of what the IT sector is up to and whether that's out of the woods after that huge crack yesterday. By the way, the Nifty has fallen a good 0.5% now, so it's no more that nimble start. We've definitely taken a tide for the worse. We have breached that 25,700 print. While metals, of course, are your weak link, a large part of the market is now turning around. It's barely a few names which are holding out in the green. And surprisingly enough, it is the IT names. But given that they fell so hard yesterday, I wouldn't read too much into this minuscule of a bounce just yet. But how is it that you should be looking at IT at this juncture right now? And what really could be, the impact of the SaaSpocalypse, which is currently playing out across the world? Let's try and understand with Mosha Khatri and hear out his views on what he's making of all these developments. Mosha, great to have you on ET now. Thank you for your time. Mosha, we've seen this major tech sell-off, both in the US and its impact here in India as well on the IT services majors. Tell me, do you think this is just panic over what Anthropic is going to do and what the Claude model is going to do? Or is this more of a structural issue that we saw play out?
This almost feels like deja vu because we've been literally talking about this for 2 years. The industry has been going through concerns related to discretionary spending, concerns related to the disruptive impact of GenAI, concerns related to the disruptive impact of GCCs. All this has been going on for 2 years. All I can say is that a couple of things. First, near term, if you look at the earnings releases from most companies that came out, it seems the numbers are probably a bit better than expected, and it seems that guidance for the next 6-12 months is a bit better than expected, number one. Number two, most companies in the space have been really aggressively changing their model. If you want to be able to survive this Gen AI disruption phase, you have to do two things. You have to decouple the whole thing around revenue growth from headcount growth. And then you also have to start focusing more on performance-based contracts rather than T&M or, the traditional model. And a lot of companies are actually focusing on that as well. So these are all good things, positive developments. And then on top of that, if you really want to benefit from this Gen AI spending cycle, a lot of companies are focusing on this from the infrastructure side of business, i.e., the data piece, the integration piece. These are all areas that are very, very well, I would say companies are very well positioned to succeed in these areas. So that's how I kind of see that. The recent sell-off seems to be more like panic selling than anything else to me. But also you want to add the fact that it wasn't only Anthropic that spoke about the release of these new products, but the same day you also had Gartner that came out with numbers and actually gave guidance that was much weaker than what people kind of expected for calendar 26. So that added to this whole, panic selling. But net, it seems that the next 6-12 months are going to be better than what we've seen in the past 2 years in terms of growth rates for the industry. So I'm probably a bit less concerned about where the industry is going, just given some of those aggressive moves that have been taken by many vendors in the space.
Not as disruptive, Mosha. That's what I'm hearing from you. You seem more constructive, more positive. What's giving you that confidence that there won't be as large a disruption as the market seems to be building in?
As I said, some of the strategic moves that are being undertaken by vendors in the space, reskilling, the model changes, and then some of the relationships, strategic partnerships that have been formed by some of the vendors in the space. I've been around 10 years ago when cloud, the whole thing around cloud was kind of a new theme. And back then, the common belief was that the shift to the cloud will eliminate the need for software or custom software application development. So the typical belief 10 years ago was that any sort of need for consulting pretty much is going to go away. And here we are 3 years after that. Um, the whole cloud phenomena created a new spending cycle on the integration side, a very large one for the space. And I think that we're headed towards a very similar kind of scenario here, where we're going to go from an extremely bearish scenario for the space to probably more constructive. And so that's how we kind of see it.
So, Moshe, how should investors be looking at this opportunity right now? Would you say that one is going to resent not buying into the fall, maybe even a year, 2 years down the line?
I would say that investors are pretty much equally split in terms of their outlook for the space. We still talk to some people that are very, very bearish about the outlook, and then people that are probably a bit more constructive. So it really depends on how you kind of look at this. And I would say it's still pretty controversial. You definitely don't have a unified thought about where the industry is going to go. If you're, obviously a year from now, things are going to look a bit different in our view in terms of growth rates and in terms of the multiples for the space.
Moshe, how would the IT environment as a whole change? So, of course, you're making a case that they will adapt and they will likely have to adopt AI to a certain extent as well. They've been behind the curve there. Is that at all a concern? And how do the numbers therefore change? Do employees start to come down? Do we start to see revenue also come down? Do we see margins start to inch up? Efficiencies go up? Revenue per employee go up? What are the parameters?
So it's not only about that, it's also not only about model changes, it's also about some of the Gen AI projects reaching scale. I think the biggest issue here is that a lot of these have not reached scale. Once you reach scale, there's going to be more spending on data manipulation, on integration. And this actually will drive growth for the industry. It could happen 6 months from now. It could also happen 12 months from now. So that's what we're kind of looking for. In terms of some of the metrics, we should see, as he said, better numbers in terms of billable headcount, bill revenue per bill headcount. And then on top of that, we should also see better margins for the space. And it is ironic because a year or 2 years ago, there was a lot of concern about margin compression. And ironically, that's not what we're seeing. We're actually seeing margins improving. Again, because you are decoupling revenue from headcount growth, and because you are focusing more on performance-based contracts and fixed price work. If you're able to, if you know how to do this, you should do extremely well on both fronts in terms of revenue per billable and in terms of margins. And there are some companies that are getting there. There's a publicly traded company called Huron. Their symbol's HURN. They do performance-based contracts, and they have done exceptionally well even in this environment. So model changes, you're going to see that reflected in metrics. But on top of that, you need to see some of those Gen AI projects reaching scale. And this is where you're going to see projects getting larger for the space.
And Moshe, I wonder if at all, therefore, will the winners over the next maybe 5-10 years be materially different from the companies which have won in the last couple of decades, and therefore will a new set of winners likely emerge, or will the existing companies continue to grow larger in size and pretty much in tandem with the others?
So in our view, the tier ones that are based out of India are very well positioned to participate in this spending cycle, given their integration expertise and given some of the work they're doing in data. And you will see some others that are very specialized that are continuing to do well. GenAI is one area, product development, ER&D. These are very specific areas, and you will see companies that are very, very much focused on those specific niches that are growing faster than the industry. Many of them are private, some of them will go public, some of them will get acquired, but I would say a bit of both. The larger companies, in our view, are well positioned, and you have some more specialized companies in the space. And you'll hear those names once they go public.
And last off, I want to try and understand what happens on the margin count. I'm not sure if I caught that fully or not. Do you expect, therefore, the margin trajectory to be materially different? Maybe it may take a couple of years to get there, but will margins therefore change structurally for some of these names?
In our view, because of the productivity improvement and because you're decoupling revenue from headcount growth, this should actually help margins for the space. I don't know if margins are going to double. I don't know if margins are going to be up, X amount of basis points. But based on what we're seeing, this whole concern about margin compression has been overblown. That's for sure.
Okay, Moshe, thank you so much. This has been extremely informative, and your views always very, very well valued. So thank you so much for coming in and speaking with us.
Thank you. Have a good one.
Thank you.